I love gold. I love gold so much that I even lost my genitalia in an unfortunate smelting accident.
Well, welcome. Good to have you here. My name's Tony, and I'm a trader. I'm an aspiring trader, but I'm a trader nonetheless. I've been doing this for almost 2 years now, from the day trading perspective. And I got a very funny question the other day. I was sitting in jiu-jitsu, and one of the parents saw me trading and started to ask me a few questions on trading. And that slowly evolved into, a month back and forth, what is trading, telling them to get TradingView, giving them a couple of things to look at in terms of the chart. And then a month later, I start to get the emails coming in with the screenshots on how do I do this? Where do I enter? Where do I exit? And the first thing that I noticed was looking at the 1 minute chart. And the second thing I noticed was just the sheer amount of different channels and bits of information that this person had amassed. And it reminded me so much of myself. And there was so many learnings that I had early on that I wish I could help somebody else with, so that they don't have to suffer in the same way that I did. And I think first things first, and this is what this video is about today, is the most basics. I'm not going to try and teach anyone how to trade. I think that's the silliest idea ever. Trading is I wouldn't say a very personal journey, but it's certainly something that takes conviction. And if you're someone that's copying a strategy, you don't have conviction in that strategy. Sure, you have the belief that this other person is making money, but in times of drawdown, it's going to really hurt where you have to hold through a trade or potentially take a loss with the knowledge that your win rate will ultimately save you from this one loss. So you need to look at the market yourselves and find a pattern that you're comfortable with and that you see yourself personally. So where do you begin? Where do you start? So the first thing that you have to do is to open up TradingView. I mean, it is literally the easiest thing in the world to use in terms of trading and viewing charts. So I'm just going to use the Pepperstone gold chart at the moment. And let's go through a couple of basics. So if you're going to jump onto the 1 minute chart, it's gonna be noisy. It's gonna be a lot of noise in that. Plus, you're not really gonna see each of these denotes a day. So you'll see there's gonna be so much to try and figure out what you're doing. If you're doing candle patterns, if you're doing chart patterns, whatever the case might be. I would not want to sit on the 1 minute chart. Reason being is there's so much noise. There's so many individual traders, institutions, whatever, putting in various buy and sell orders. Some of them are bigger than the others, hence why price goes up. Some are smaller than the others, hence why price goes down. So what you probably want to do as a beginner is get onto higher time frames where there's way less noise. So there's gonna be a lot of less noise on the daily, and when you're looking at something like the daily, the first thing that you can notice, and this is kind of what got me into day trading, is that hold up, there are points on this chart where I can actually see prices touching and retreating, retreating. And sometimes when it breaks out of that particular horizontal line, I can see it comes back to potentially retest and then come off. And then the same thing happens here. It comes down, breaks through, retests, carry on down, comes through, touches, retests, goes down. Can't break this level because what do you have just below it? Another freaking level. So you can see quite clearly that if you go and sit in the daily, you will get some pretty interesting lines that can help you in deciding. And here's some of them from the previous example that I was showing that person. You will see that you can actually tell or map out certain points where people are going to call it liquidity, people are going to call it stop hunts, whatever the case might be. For me, it's not so much something that I need to have faith in. I need to practically understand what is happening at those levels. Otherwise, it doesn't make sense to me, and I'm not going to trust them. And so what ultimately is happening at those levels is you have market participants, you have big banks, you have whatever the case might be, that will only purchase, and machines, by the way, that will only purchase at certain prices. I know myself, some professional traders that would rather die than put in a market order. Price has to get to where they want it to come in order for them to take a trade with the expected outcome. So this is why you will see at certain points in the chart, things are going to react consistently. Here's a great example: consistent, wait down, come through, gap up, consistent down. So you can see here that there are definitely some places to do. Now, I particularly am not following a lot of horizontal lines. What I like to follow is on the 4-hour. So on the 4-hour, what I'm going to do is I'm going to just go one further than these lines, and I'm going to draw blocks around certain points in the chart. So for me, where price has made a huge move out of, it will leave something at the bottom there. And we can tell based on what we've just spoken about that there are points here where it will continue to react off of that. So for me, at the bottom of a downtrend, before there's a big move upwards, it's going to leave one bearish candle with a wick. And at the top of any channel, support line, whatever the case might be, at the top of where price is going to go to, it's likely going to make or print a green candle followed by a red candle and then a retracement back from there. So I'm going to use those 2 points on the 4-hour chart to get my levels in particular. So it makes it a lot more simpler for me. So like I said, I just go on something like that and I look for the last wick down. So we know that that's a point. We can take away this line here. For me, here was another point over here. And you could argue that that's a point as well. Let's just pop that over there. It doesn't have to be exact. It doesn't have to be specific. It just needs to be logical. Whatever in your mind's eye that you can use in order to mark where price potentially will do something, have a reaction. Now, once I have those areas mapped out on the chart, what I'm going to do is start to create some sort of entry criteria or something like that from there, right? And this is where both journaling, which will be a future video, and practically where you're going to start. So how do we even begin to make trades from this? Well, it's pretty simple, right? If in the past price has come down to areas where there's been reactions, so clear areas of support, breaking through resistance, breaking through back support, up and down. If those areas exist, then there's a potential for me to do something like this. So I can take a long position tool and I can draw a potential position that I would like, and then a potential target that I would like. Now let's just go mark at the top of this channel here, something like that. Maybe drop down to the 1 hour to further refine it. So we'll look at something like that. We could even say on the 1 hour, we've got something like that over there. And here might be a better trade. So what are these lines? These are not the gospel. These are not places where you 100% are confident. You're never 100% confident, but these are not places on the chart that are going to give you 100% confidence. You're going to have to find your own entry criteria for them. But before that, what they do offer you though, in return, is risk management. Because this is what most of trading is to me personally, is risk management. So these areas are not going to be the areas that are going to give me 100% guarantee on anything. But what they are going to do is allow me to create a trade that has a specific exit and a specific entry. And for me, always, you're looking for positive risk to rewards, right? 3 to 3.5 to 1 is really, really good. But anything over like a 1.5 would give you a coin flip probability of being profitable long term. Because remember, making money is both a combination of win rate and risk to reward. It's not one or the other. You can have a 20% win rate with a 10 to 1 risk to reward, and you're going to be making so much money you wouldn't even know what to do with it. However, you could have a 90% win rate with a less or negative risk to reward, and it doesn't matter how good it looks on paper that you're winning every trade. When things go wrong, they will go horribly wrong. And there's a couple of good examples recently on YouTube with gurus where negative risk to reward has come back to bite people very, very hard. And I learned that very, very early on from, of course, copy trading, one of those individuals that had the negative risk to reward. And I found out the hard way. So let's get back to this. What this now provides you on your chart is an area to manage risk. If price comes to this area, right, and then produces, I don't know, some sort of engulfing candle. So a candle that is bigger than the previous candle in the opposite direction. And what I mean by that is, let's go look for it engulfing. Here's a perfect example. Something maybe like this green one over here. Maybe something like, let's look for a good one. There's a good one. That's a good engulfing candle over there. Didn't go in the way that you would like it, but it's a great engulfing candle. Couple of other good ones. I mean, obviously, there's a big one. So when price gets to this specific area, or whatever area you choose, maybe you've got some sort of criteria where you say, you know, an engulfing candle pushing out of the zone, I'm going to wait for that to happen, and then I'm going to take it. Or potentially you want price to come down to this area, bounce out of this area, retest this area. That's where I take my trade, hoping that price moves up to the next area, or whatever take profit that you wanted at that specific time. So that would be a way that you could set up a trade and manage the risk for that trade, and how you would potentially take the profits from it. So each of these is going to have specific names. Different people are going to be playing different games in terms of how they enter, how they exit, what they take profits on, everything else like that, whether it's a swing trade, whether it's a day scalp, whether you're doing what I do on the 30-minute, whether you're doing what you do on the 4-hour. I'm not too sure. But this would give you a basic starting point to chart reading and understanding what you're looking at. Now, there's no easy way forward past this point other than time on the charts, understanding or appreciating or seeing for yourself how price is reacting in general at specific levels. You do that long enough, and suddenly one day you will see something click. And once it clicks, you will be like, oh, there's a pattern. There's a pattern right there. And what you do then is you start obviously opening up a demo account, so taking a really small bank balance into a micro lot trading strategy, and you test that out in real time. You can obviously go back and test it out with all the data you want, and something like TradingView will give you the replay tool where you can go and do that. So do as much of that as humanly possible, and once you develop that confidence, go ahead, take your trades and see what happens. So that's enough for today. I hope you learned something. If not, I hope this video wasn't too boring. What you can expect in follow-up videos would be me taking you through things like my trading journal, taking you through how you're tracking your trades, what you're doing with your trades, and all these sorts of things. So that's that for today. I hope you learned a lesson. I hope you learned something. If you are a beginner trader, I hope you are taking it slow, trying to pick up the basics, trying to understand it for yourself more than relying on others to do this. This industry is particularly difficult in terms of finding individuals that are trustworthy, finding strategies that are not wrapped up in marketing jargon and lingo and all types of weird stuff like that, and that you can find something that will work for you and your personality type. That is the most important thing to do. If you are trading and you're feeling excited, or if there's any emotions running through, you're doing the wrong thing. You're basically gambling. This is not a place for you to find your excitement. This is a place for us to make money. You can trade your way out of any situation that you have in your life. And I'm hopefully going to drop some bits of information that can short track that progress. And I'll see you on the other side. Much love. Peace out. Have a great day.
I love gold. I love gold so much that I even lost my genitalia in an unfortunate smelting accident.